What if I told you Blake Lively could actually win her lawsuit and still end up in federal prison? Yeah, you heard that right. Right now, everyone's talking about the drama, the texts, the feud with Justin Baldoni, but almost nobody is talking about the one thing that could destroy Blake Lively worse than any headline ever could: the IRS. Because if she gets what she's asking for in court, to be declared an employee, she might accidentally confess to tax fraud on a massive scale. Here's how it works. Blake Lively did not sign the It Ends With Us contract as Blake Lively individual. She signed it through her loan-out corporation, Blakel Inc. That's standard Hollywood. Scarlett does it, Leo does it, Ryan Reynolds does it. The studio pays the corporation pays Blake, and suddenly nannies, publicists, private jets, hair and makeup, even legal fees become business expenses. She pays way less tax on that $1.75 million fee than you or I would on a regular salary. The studio sent a 1099 to Blakel Inc. They didn't withhold Social Security, Medicare, nothing. Legally, she was a contractor. Fast forward to December 2024. Blake files a lawsuit claiming sexual harassment and retaliation as an employee of Wayfarer Studios. She wants employment law damages, emotional distress, lost wages, the full Title VII package. But you can't be a contractor on your 2023 tax return and an employee for the exact same job in a 2025 lawsuit. Those two things cannot both be true. If the judge or jury says, yes, Blake Lively was an employee, three things instantly become public record. She received wages, not contractor income. All those juicy business deductions she took, suddenly improper. The damages she wins are officially for employment-related harm. The IRS and Department of Labor watch high-profile reclassifications like hawks. A win equals an automatic audit, back taxes, interest, civil fraud penalties up to 75%, and if they prove she did it on purpose, felony tax charges, up to 5 years per count. Wesley Snipes did 3 years for less. And it gets worse. Look at her own damages filing, the 56.1 statement. She's not saying she lost money from the movie. She admits she got her full fee plus bonuses. Instead, she claims the smear campaign hurt her personal brands, Blake Brown Hair Care and Betty Boo's. Hold up. Employees don't get to claim lost revenue from their side businesses in an employment lawsuit. That's a business owner argument. She's literally telling the court, I'm an employee, but also my LLCs got damaged. Pick one, Blake. She already got the contractor perks, lower taxes, massive write-offs, no payroll withholding. Now she wants the employee jackpot, statutory damages, emotional distress awards, attorney's fees under employment law. That's double dipping, and the tax code hates double dipping. Her lawyers, Michael Gottlieb at Wilkie Farr, big firm, very smart people, they know this. So why did they file? Because this was never supposed to go to trial. It started as leverage, threaten a nuclear lawsuit, force a sequel buyout, or a quiet payout. But Baldoni and Wayfarer called the bluff. Now financial records are getting subpoenaed, contradictions are on full display, and the hole keeps getting deeper. So here are the only 3 ways this ends. 1. The judge grants summary judgment and throws the case out. Blake walks away bruised, but no tax nightmare. 2. They settle and watch the lawyers write the most carefully worded agreement in history so the IRS can't touch it. 3. It goes to trial, she wins big, and the verdict becomes the biggest red flag the IRS has ever seen. Audit, back taxes, interest, civil fraud penalties up to 75%, and if they prove she did it on purpose, felony tax charges, up to 5 years per count. Wesley Snipes did 3 years for less. So, drop your thoughts below. Do you think her team finds an exit ramp before trial, or is this heading straight into an IRS disaster? Smash like if this blew your mind. Subscribe and hit the bell because this case is about to get even crazier. I'll see you in the next one.